Mm-hmm.
Week, like I said, and I figured, hey, let's put some of this to work. What do you think, Dad? And he took the initiative to say, okay, let's do it.
Okay, excellent. And just quickly, was your how active was your dad in the markets? Was he an active trader?
No, my dad he's retired now, but he's a physician, and he would, he was pretty active, but not by any measure compared to like what I do today or have where my trading has evolved to. He's been more of a buy and hold for 6 to 12 month type of investments.
Okay, sure, cool. All right. Well, so from college, moving forward a couple years, you landed a job as a stockbroker. How did that come about, and what sort of tasks were you doing in your role as a stockbroker on sort of a day-to-day basis?
Well, the interesting thing was that I really didn't know what a stockbroker did. And maybe that's naive, but I think it's good too because I probably wouldn't have gotten into it if I realized what a broker's job was. So, after college, I didn't really know exactly what I wanted to do. I knew I liked the market and happened to find a brokerage firm that was willing to sponsor me for the Series 7 license. Once that occurred, I went, in to the office, and they basically gave us a script and said, start, calling off these lists, find phone books, alumni directories, and that sort of thing. And it was, after I passed my Series 7 license and was making the calls for a while, I realized that the business was really a glorified telemarketing position, not the trading that I was interested in. So again, probably a little bit naive, but it's it got me in the door. I went to a more established firm, which was Lehman Brothers, and really learned how to sell there more than anything, which was great training. And then just kind of transitioned to trading from there after moving to a couple different brokerage firms.
Okay, so you were mostly on the phones there, trying to convince people to buy stock. Is that correct?
Yeah, yeah, and it's I like to kid around about it and say that it was great experience because I got to practice with other people's money, and I wasn't cavalier with anyone's money that they entrusted me to, but I did learn a lot of good lessons by not having my money in the market and learning how the market worked a little bit. So I was instantly attracted to technical analysis. It made a lot of sense to me. One of the early influences there, I guess, was there was a newsletter called the Cabot Market Letter, and they had written about, they were interested in buying this stock if it got above a certain level. And I thought, well, isn't that strange? Why would somebody want to buy it at a higher price? That seems kind of counterintuitive. So I looked into it, and I saw the chart, and it instantly made sense that if it got above that level of resistance, I didn't even know that's what it was called at the time, but if it got above there, that it looked like it was clear sailing from there. So I ended up getting involved in that stock, made money, and just started to devour everything I could find about technical analysis.
Okay, sure. So you went to the stockbroking firm, and then you went to Lehman Brothers. From there, I believe you ended up trading with a prop firm. What was your experience like trading with a firm, and what was the attraction to actually get into a firm instead of trading your own money, just as a retail guy?
Yeah, I think I was 22 or 23 years old when I did that, and it was basically I had saved up some money in the market, and I had seen in the back of Investors Business Daily there was every single week a advertisement for trade with our capital, or earn 20 to use 20 to 1 leverage is what it was. So I was intrigued with that because I figured that I didn't have enough money to really get involved in the market with the amount of capital that I had. So I was still a broker. I answered this ad, went to New York, and met with these guys. And I signed up as a remote trader, and this was 24K modem, and I remember being all excited with a 48K modem, sitting there in my basement trading. And they didn't give a lot of training. That was the thing that they basically said, okay, we'll give you a shot. You get to keep X percentage of your profits. And I had, I basically borrowed some money to put down for that initial $25,000 deposit. And so therefore I was extremely risk averse. And that really helped me. I mean, they say don't trade with scared money, and I don't think it was necessarily scared money, but I was being smart and really people say they don't like to lose, and I say in the market you have to hate to lose. You really have to. When you start feeling something moving against you and you get uncomfortable, you just have to get the heck out of it. So I was fortunate in a way that I wasn't scared money, that I had the opportunity to see how stocks traded, technically, through my experiences as a retail broker. So that was great experience for me. And from there, then I helped them. That is the New York firm that I was with. I helped them open an office in Denver, and kind of started branching out that way a little bit.
Okay, sure. And did you mention in there that you were working, or you were trading, sorry, remotely from the firm?
Yes, it was. So they were out of New York, and they didn't have any local offices, so they were sponsoring people to, trade with their leverage basically, and they got a piece of the commission, and they marked up the commissions a little bit. So that plus the additional profit that they made, it was a good business model for them, and it was a great opportunity for myself.
Okay, sure. And are there many prop firms that still kind of operate that way today?
Yeah, there are. Yeah, there's still. I mean, if you dig around, you can find them, and they are. A lot of times people are attracted to them. I can't criticize the firms or the people who are attracted to them, because what they typically attract are people with less capital and maybe not a whole lot of education either, but they're willing to give them a shot basically in the market. And I would say that knowing what I know about the markets today, that I took a huge risk that I would not recommend anyone else do when I did do that account with the prop firm, but it worked for me. So I think that everyone, has the right to make that decision for themselves.
Yeah, absolutely. So you mentioned right there that you took on a huge amount of risk to do this. Did you ever have a backup plan in case this trading thing never took off for you?
Um, Great question. And I can't really say that I had a defined backup plan. It was more, I'm going to make this work one way or another. And I suppose that if it didn't work out, I would have returned to the brokerage business and started, building a book of business that way again.
Okay, sure. So during this time, up until sort of where we are right now in your journey, what would you say was the biggest challenge, within these sort of first 5 years? The biggest challenge or some of the hurdles that you had to overcome that were essentially affecting your P&L in a negative way?
Well, I think it's true for almost anyone that we are our own worst enemies. And, I'm not sure if that's the answer you're looking for, if you're thinking, maybe some external factor. But realistically, I think that we are all our own worst enemy in the market. That even today, I'm still astounded some days about some of the decisions I make during the day, and think, well, I knew better than that. What was I thinking? And to control our impulses and to be more disciplined, to cut losers quickly and to hold winners, real basic stuff. Those are the things that trip pretty much everyone up and continue to plague, anyone involved in the market who's honest. We are human. We do get emotionally involved, even though we try not to. And the thing that I've gotten a lot better at is recognizing those times when I'm making poor decisions and saying, enough, just stop, liquidate the position. This is not smart. So it's a matter of probably trading too, more specifically, maybe I started trading too big and too concentrated in certain positions.
Right, recording has started. Welcome to the stream, guys. In this quick, or relatively quick video, I'm just going to be going over my trades from yesterday. I took two trades, both following the 10 EMA setup. I shorted on one trade and longed on the other. So basically, how we're going to do this, I'm just going to market replay and just demonstrate what trades I should have taken. Also commenting on why, and also, what trades I did take and how I could have made them better. So obviously, first things first, we always have to go out to the daily time frame before we even start to trade. And the one thing you want to do is just highlight any key levels. So for example, I've got my moving averages highlighted. There's a 50 down there on the daily, as well as this green line, which is a quite a key support from previously in October. So once you have all that done, obviously then go onto the 3-minute chart or the 5-minute, whatever your preference is. My preference is 3-minute at the minute. And obviously we're gapping up. Now at this point you could highlight, for example, the pre-market support and resistances as the high and the low. Oh. Like so. Because these will act as like liquidity areas usually. So now let's just go into this trade. So first candle, we see massive bullish candle. We're obviously gapping up as well, so it's the correct sort of move we want to be seeing. Obviously, we don't want to be seeing like a massive bearish candle flushing through pre-market support. So it ticks the ball. The ball, it just ticks for the balls, So next candle comes in, another bullish candle. Not really much we can do. There's no entry yet. And then after this one, we get our first entry, which we should have taken. I didn't take, because in my mind, at this present moment, I was still thinking about shorting. If you don't know already, I am in short on Tesla from 211.65. So obviously I'm thinking to myself, right, let's obviously add more shares short on these pops, blah blah blah. So yeah, I didn't take this setup. I didn't even short it either. I just waited, but this is what I should have taken. You know, obviously entry above this candle, stop loss at the below this recent bear candle, right, and then obviously targeting 1.2. So yeah, that would have left us, you know, with some decent profit if we did take that. Unluckily we didn't. We just sat around for this chop. So let's just go through these candles again. And also, want to just notice this massive, or at least thicker red line is from the previous. It's from the previous gap. So if I go on the hourly chart here, it's from the previous open. Right, the previous open on the 15, for example. So you can obviously see that also pre-market support held, or resistance held quite well there as well. So, you know, breaking that level and actually breaking above it and staying above it is quite crucial for the stock. And the fact that we saw higher volume come in, let's find my arrow tool. Yeah, the fact we saw higher volume come in right here is, you know, pretty amazing if you did actually get triggered on this first candle. You know, I'm kicking myself because I wish I did, but, you know, always look at the volume, always look at the support and resistances which are breaking. So yeah, we're just going to fast forward a little bit here because I do know what happens. Obviously we go up a little bit, we create a high. Also make sure to follow along this volume. Just keep your eyes on this volume because something really cool happens here. So obviously volume here, very, very strong. Let's highlight it. Very, very strong volume, you know, super bullish. Obviously that candle does not want to be taken out, which is this candle right here, because obviously if it does get taken out, you know, bears are in control because all them balls are then basically trapped. So our first red candle comes in from us, you know, pushing higher, and then we end up taking out the candle right here. So look, taken out. Let's make it blue, or at least it's the next one here. Taken out. So obviously right now I'm thinking, right, I need to get into short. And this is where I got my first short idea, was because this is the strategy I usually play. If I see either a massive bull candle with, I mean it's not massive, don't get me wrong, but if I see a good bull candle with very high volume getting taken out, I want to go in short. Likewise for being a bear, if I see a massive bear candle get taken out, obviously I want to be in long. So I'm then looking for a first 10 EMA setup, and I see this one. And I believe that in a chat I did actually set this one up first, but we didn't get triggered. So obviously stop loss like this, target 1.2R. And yeah, obviously I'm still in a short mind. I'm in a short biased mindset, so I want to be seeing this thing drop. You know, because I'm swinging it, etc. So entry below, we're looking to get triggered. We then see this next bull candle, I move my stop loss. I move my sell limit order just a little bit up, tightening the profit as well, just to make it 1.2R, so we're in and out of the trade easily. And then basically we see this, obviously disgusting candle, very high upper wick, rejection for sellers. So obviously very, very bearish. It's just what you want to see. And yeah, we get triggered on this candle, as you can see right there. So we're like, right, it's going well. Let's hope we can start, you know, breaking through this area of support around here, which I really should have just noticed at the beginning. Because quite frankly, we saw such a move or such a gap from the prior day. There's literally no support within this area here. This is going to get a little bit messy, but in this area here, basically there is no support, nothing. So quite frankly, if we break this area, we are just going to go whoop and go straight down. So obviously that's what I'm hoping for my swing to do. But if we skip a few candles, you can notice that we don't do that. And also pay attention to that volume. This is a very, very high volume bearish candle. Yeah. Again, gets taken out. What is it? It's going to be bullish. So I'm obviously keeping my eye on that. I then see this candle, a nice bullish candle, and I'm thinking to myself, right, that's not what I want. It just isn't what I want. So then I actually do end up exiting my shares for a very, very small win. I think like 0.1R, which is still a win at the end of the day. You know, I'm not going to sit here and complain. But I really just shouldn't have entered in short. I shouldn't have entered in short on this candle, on this trade. Because quite frankly, you know, we're still in this area. We're not breaking below it. So it's like, what is the point? Why am I even doing that? So that's, I mean, it's not a mistake. I handled it very well considering I did risk manage. And moved my stop loss tighter, or at least exit when I did see, you know, a bear stepping up. A bull stepping up, sorry. And then, yeah, look, we take out this candle right here. So yeah, it's obviously more bullish than bearish. So that's the first trade I took, and then basically after that, we just consolidated, we chopped around, blah blah blah, and then we start moving. I also just want to highlight quickly that we saw the perfect decreasing volume on the 15, like perfect. Let's just delete these quick. Like, just look at this volume right here. It's like the classic bear flag, a bull flag. I mean, you know, it's perfect. I should have loaded more shares in this area, but you know, it's a mistake obviously. Gonna go back to the 3-min. Obviously need to start paying attention to 15, in my opinion. I obviously need to start paying attention to the 15. But yeah, we also created a little range down here. We broke out of the range. We're still not in position. We're still just watching this stock. We did see a 10 EMA setup come right here. Let me show you guys. Obviously, bear candles right here. Could have went bosh, bosh, bosh. 1.2R target. Completed it, mate. That's just how I should have traded. But I didn't. I was pussy, and I quite frankly just waited. I was just like, man, this thing's gonna fail. It's gonna go short. But you know, we didn't. I was in the wrong mindset. It is what it is. Sometimes you are just going to be in the wrong mindset, and you know, you just got to live with it. It just is what it is. Price action is price action. Yeah, the best way to obviously understand is to back trade, and that is what I am doing. So now let's get to where I did enter long. So obviously we see this, we're approaching a new high, so let's just label this area. New high day. Where is it gone? It's in white, that's why. New high day, let's change it to the middle. So we see our massive bull candle, obviously still looking at bear candles. Yes, the classic flag sort of thing. Also sort of like a cup and handle going on right here. You know, that's also what I saw. But other than that, it's just like a bear flag, bull flag, sorry. So yeah, see a big bullish candle, very nice volume. Comes a trade, so we're like, right, I think this thing might be start to move now. We get our first bearish setup right here. Where's the bear candle at? Right here. Okay, maybe not, but I think I entered along here anyways, because obviously we're just consolidating, and in my opinion, it just looks like we're gonna go higher. You know, all these. I mean, shorts are still defending this level from here. So over this, we are going to squeeze, and you know, lo and behold, we did actually end up squeezing. Just like this, I targeted. Let's set up the trade actually. This is how I took it. Like this, and I went for a 1.2R target at 120, so that was a lot more tighter. So that is how it was. I exited all my shares at 120, and that was on that candle right there. So I'm literally in the trade for what, 12 minutes, which is insane. So yeah, I did size up on this trade as well. I went for a 0.5% risk unit because I was confident in the setup. I saw volume stepping up, and obviously, you know, we saw it here as well. I could have stayed in the trade for longer as it did push a little bit higher. But yeah, that was basically the two trades I took yesterday. Yeah, let's just make some notes on why I took them. So let's just go up here, for instance. So the first trade I took was short. And what do I need to improve? Sometimes it just helps doing this, guys. I don't know if any of you guys do it, but making notes just so you can read out to yourself is quite helpful in back trading. But for instance, on my short trade, I need to follow the trend. We were gapping up. And I went short. Obviously, I should have went long. So I should have took a step back and looked at the bigger picture of the overall trend and market structure. I should have. Fuck me. I'm meant to be a university student. I'm like, my grammar's terrible. But yeah, that's my first trade. And basically what I need to do to resolve this, so solution for this would be, for me, maybe just to look at the, just to zoom out on the hourly every now and then. And to check the trend, as well as how the volume looks. So yeah, that's my solution for it. Just to take a step back, look at how the volume looks on the bigger time frames, like the 15. Because obviously the 15 looks very, very bullish because we was fading volume. So I really shouldn't have took it long, short. I mean, because we're fucking hell. We are putting back on low volume, and quite frankly, that's not bearish because sellers aren't selling. People, sellers are drying up, and so are buyers, and we've come to this area of like equilibrium where prices just remain static for a period of time. We then break over this, let's say top of the range is here, and we get a few pullbacks right here, which I should have gotten. I did take this pullback, sorry. But anyways, I shouldn't have went short. Destined to that one. Obviously, my winning trade or my long trade, which I did, I wouldn't say that I have any solutions for that one because it was just a good trade. Like, I did everything right. I entered at the right time, and yeah, I just took the trade well. I mean, I could have secured more profit, don't get me wrong, but it just is what it is. Sometimes the stock's going to run a lot more than you think, and sometimes it's going to go the complete other way and get stopped out. But I don't know. I don't know how much the stock is going to run, so you just got to take it with a grain of salt and let's move on to the next trade. I will get better at doing these videos. Obviously, super new to them. This is the first one, guys, so let me off if it's a little bit sloppy. But yeah, I hope you guys, or I wish you guys the best of luck in trading today, and this will be published on YouTube. Obviously, I'll start doing these daily, go over my trades, etc. I might start annotating the charts as I'm doing it to make it a little bit more clearer into why I'm taking them. Let's hope I can smash out some good trades today, and then hopefully have some decent trades to show you guys. With as well no solutions maybe to the trades. Maybe I'll just ace them today. But yeah, we'll see. Tesla is currently gapping up right now. Let's go out of this. Let's have a little talk about Tesla. I've already mapped it out, my levels. Let's go on the big picture. Go on the 15. That is not the indicator I want. That is not one either. Okay, what's going on? Get that away. Yeah, so this is 15-minute time frame. This is basically what I'm seeing. Obviously, the daily is a morning star pattern. We saw increased volume, so it checks the boxes for bullish. We are now coming into the evening star on the daily, which is this one here with the massive bear candle. So I just want to see sellers step up here. If we don't see them step up, then I'll be surprised, quite frankly. So going back to the 15, this is where sellers really did step up. It's too small. This area right here. So in this red. So I'll be surprised if we beat it. Obviously we have the 200 EMA on the daily, just above at 214. And then a 3-month resistance just above that. If we go on the inverted chart, go on the hourly, sorry, excuse me. Go on the hourly, turn on extended hours. I just want to show you some wick off. So, obviously right here is the, this is inverted for instance, but obviously right here is the downtrend. If you're looking, I mean, I just look at the stocks better from a long term, from a bull's perspective. So this one going inverted for a short. So obviously we've got the downtrend, we've got the spring. I need to start running, man. And then we have the next pullback for it. Obviously clears out any shorts with a stop loss below this level. So they're obviously out of the game now. And now we're just fading back. So it's quite a hard picture. I mean, if we go above this line here, it could be bearish, and we could start seeing more momentum for the breakout of the support. But other than that, I don't know. This looks like we're going to press higher today, or we might see like a little consolidation candle. But the one thing I do want to say is make sure you pay attention to this evening star gap on the daily. So I've got some zones here. If you want to take down the prices, it is just 211.76 to 210.78. That's the main gap, right? We're currently in that gap in pre-market. If we open and flush down straight away, see a massive bearish candle, I am so catching the first pullback and shorting it. Yeah, I mean, don't get me wrong. Yesterday's candle was super bullish, but we are still technically in a downtrend. Because look, bosh. What is this bit here? It is a lower high. Still a lower high, even if it goes up here. Still a lower high, even if it goes up here. Unless it takes out this high here, then you can start being like, yeah, mate, this is bullish. But until then, I'm still going to keep it bearish. We've still not taken out this massive bear candle here. This massive wick, for instance. So yeah, I'm still bearish on Tesla. So yeah, hope you guys like the stream as well.